Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to look at Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in, take a look, see what people are sharing. If you want to follow me, it's at finding_finance. And if you want to join our community, finding-value.com. I dive deeper into all these sectors, looking for potential investment opportunities. I look at a lot of the big macro picture, big picture views on market conditions, and I share that with everyone in the community of what I'm doing for this commodity bull market, what I'm buying, the portfolios that I'm adding to, and what I'm adding into them. If that sounds interesting to you, we have a Mayday coupon code, MAYDAY, one word, for a discount if you'd like to sign up. 50% off the first month only on the monthly membership, and a larger discount on the yearly membership. For anyone who wants to sign up for a yearly, you could already be a monthly member and sign up to a yearly membership to save some money. So coming on, obviously I posted some myself, and we are going over some of these. So oil price consolidation, downside, or is it complete and ready to go higher? What I did is I took the fractal of last consolidation. So this is the bull market of last one, and then the consolidation that we have. In Elliott Wave, you get these patterns that repeat over and over and over. It's a three-way move: 1, 2, 3, 4, 5. So it's a 5 upwave move, which then constitute wave 1. So this whole thing is wave 1. We got a big consolidation, which was a 3-hump consolidation of a falling wedge. At the end of that, we have another 3-hump 5-wave move up. So it's a 3-wave move up, 5 total waves. So 1 wave up, 2 back, and we went all the way up, and then we consolidated. So if we zoom in on the right-hand side here to see what's looking like, you can see we've got the 3-wave move up just like we had before, with the same fractals. The orange is the same fractals last time, overlaid on what's going on today. The SPR reserves, you can see how it distorted the signal here. This is what it normally would look like. This is distorted downward. The whole right-hand side here is distorted from SPR releases. And then we got back to normal here, and you can see the other fractal overlay on top of this. The reason this fell so much here was from 9/11 and the recession and all of that stuff that came about last end. Or sorry. This is 2020 COVID. The move here, that move there was 9/11. So 9/11 was this one. COVID was this one. This is shutting down the entire economy worldwide. So are we going to get that big move lower that some people are projecting, like $30 a barrel? I don't think so, unless there is an event or a false flag or something that occurs. And that very well could occur, and I don't know how you could see that beforehand. I don't think they're going to do that during an election year. But I do think they're going to try to hold this down to some degree, because the consumer price index of inflation is driven by oil. And with the elections coming up, I'm starting to see more and more articles come out, and them, I think, hitting the oil price and holding it down, because it seems a little bit weird the way that the oil market is trading, the patterns that are being set up, and how it reacts to some of these patterns. And they're obviously doing it at the right time to do it. So it means that they've got guys who are technical analysis guys on their team saying, we need to hit it here. We need to hit it here. And then at the same time that we get these big pre-market moves, we get news that comes out simultaneously with it. And then we get follow-on news that whatever news was released is questionable, and the sources are like, well, Israel or wherever says, we didn't say anything like that. That has nothing to do with anything. So I find it really weird that we get these big moves lower, always pre-market, and then there's these news that comes out, and they're generally false news. And we've had this multiple times now. It's not just once. Now, I don't know if we're going to get this big move lower. That is still up in the air. It could happen. It is still possible. But if we break to the upside, and I think that's probably what the government is fearing, is they don't want this to break before the elections. They need to keep it lower, so they got to hit it with everything they got to keep it down. One of the things that people look at is the price of gasoline during elections. And during those elections, it is very favorable to have affordable gas prices when people are voting, as weird as that seems. So, this is another thing to think about. If they are manipulating the oil price to some degree during election timeframes, and if that's a big if, but if they are, well, what other extent are they doing across the board then? Are they holding the S&P 500 up? Are they holding silver and gold down? Are they in the markets trying to absolutely manipulate absolutely everything, like interest rates and everything else? It's probably the case. So then you want to find out, well, what are they trying to manipulate the most where they're holding it down, but the market wants to shoot it higher? That's really what we want to see. Another thing, just as information, we had, this is a pointed faceward, upward facing pattern here. That was upward facing. And then we broke to the downside. This one here is not upward facing. That's just an FYI to you guys. Because upward facing patterns generally break lower. This one isn't upward facing, it's downward facing. So you come upward, and then when you sell off, you get lower highs, and then your lows are also kind of right there going sideways. So we'll see what occurs. And this, I think, still looks absolutely phenomenal from a longer term perspective, and I'll show you what that looks like longer term. Now, as we look around, we want to combine everything. It's not just looking at one chart. Some people say, well, oil is going to go down, blah, 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 blah. Okay. We need other information. And in engineering, what we do to solve problems is we look at everything. We look at the given information, and then we determine a potential outcome, a probability of something, a probability of success, the likelihood of something occurring. Because remember, we're not playing with 100% certainties here. This is all about getting the odds and statistics and probabilities in your favor. The last big bull market in commodities occurred when the dollar fell against commodity currencies. Commodity currencies could be like Canadian dollar, the Australian dollar, the British pound I threw in there too because that's already broken out. And this is versus the United States dollar. So when you price oil in dollars, you are looking at dollar weakness. Oil is a barrel, a barrel of oil is a barrel of oil. It's how much credit or how much dollars is credit, is in the system that is pricing those barrels of oil. And then you get a mismatch between dollars chasing too few of barrels. And that's what forces the price of oil up higher in terms of dollars. So this is really important. And last bull market was 2002, 2003, all the way up to 2008, which is this declining dollar currency here. That was the big portion of it. And then we had the big pullback and then another big run up to 2011. Gold essentially peaked in 2011, which was here. The commodities peaked in 2008, and then it had another run, and some didn't get as high as the 2008 peak. It was driven by the dollar, the weakness of the dollar. And this here is the Canadian dollar versus USD. And if you look, we've got the same setup, falling wedge into the corner here. Now, is it still possible we get one last move lower, like a false breakdown lower before a move up? We could. We could, but no one knows that with any certainty. And that would be your weakness in the market. It would be the economy slowing down, people run into the dollar. It would strengthen this, which would push this currency downward, the Canadian dollar to USD, and then I think we would get the big pop after. That's what a lot of people are thinking and suggesting. But we don't know that with certainty. We don't. Looking at the Australian dollar versus the United States dollar, we have a similar setup. We had a downtrend that we broke. The commodity bull market started in 1998-99, where the commodity to stock ratio, equity ratio bottomed, and then we started hitting it hard all the way to 2011 here. So the Australian dollar outperformed from about 2002 to 2011, and that was the move up. We went into a consolidation here, a three hump consolidation. 1, 2, 3. Well, this 3 is actually here. And then we have this lead-in pattern, and now we're ready to rip. We're right at this breakout here. So the Australian dollar is about to break out against the United States dollar. When these break, oil goes up, not down. So whatever move we get, in my opinion, if oil were to get hit, would be a short-term thing because of the setup in all of these different currencies. We can also look at so this is British pound versus US dollar. Here's the other one, 1, 2, 3 hump consolidation, breakout in 2002 all the way up to 2008. And this one had a big move lower in a falling wedge, 3 hump consolidation, and we're starting to break to the upside of this. Now, this one's already breaking upward. So the British pound is starting to outperform the dollar. And if the dollar drops, we should see this break upwards, just like the pattern is suggesting. So what I am describing here is the currencies are also forming these patterns where the dollar could potentially drop against. And then we would get an outperformance of the Canadian dollar, the Australian dollar, and the US dollar. Now, every single time that we've got an outperformance of these eras, we've had oil go up. Every time. So then you have to look, okay, well, what's the probability of these all being wrong and the market going, lower? I just, not for any sustained period of time. In the short term, it could. We could have a short-term pull down. I get it. But longer term, I think oil is going to go higher with time because of the setup in all these other areas. So it says, and I'm going to kind of go back and forth. It says, people who rarely get sick, what's your secret? Well, one secret is you don't have kids because kids get sick at school, bring it home, and then get you sick. That is one thing. But generally speaking, if you don't have kids, it's about eating healthy, making sure that your iodine levels are good. You're eating enough magnesium. You're eating enough. There's a lot of things that you can get in meat that you can't necessarily get in vegetables. And I think you're having that entire nutrients filled. And then doing things like getting vitamin D from the sun, working out, and all of those things will reduce it all. I would hardly ever get sick growing up. But I do get sick way more often having kids because my kids come home, they've got colds and stuff like that, and then I catch it because they want to touch me and hug me and do all that stuff, which I understand. So washing your hands is also pretty good. So Eric Nuttall, he says 2024, a year of records for oil, record low global inventories, record high physical demand, record low net speculative length equals record low paper barrel demand, record sector outflows, record low positioning, record high geopolitical risk, and record low sentiment, which makes it's weird. It's absolutely weird. But here's the thing that it does align with: an election. Does the election and insiders know something which produces record low net speculative length, which equals record low paper barrel demand? Is there something going on there? Is it interconnected? Now, if you're playing the short term, all of that matters. If you're playing the long term, and I'll show you a long-term picture of oil, I think we're going higher in the long term. In the short term, we'll see. We might have to go lower before we go higher. Very possible. So here's the long-term big picture view of oil. I've got a long-term fractal overlay of last oil bull market over today's oil bull market and where I think we might be. So what we had were these big bull markets. We had consolidation pattern, breakout, consolidation pattern, breakout, consolidation pattern, and we've broken out of that consolidation. We are now consolidating on top of the breakout, much like we did in 2000, 2001. 2001 in this pullback there where the circle's at, that was 9/11 and the recession. And it's weird how we get these, pullbacks at the same time that these things occur. I took the fractal, this gray, the orange, and moved it over and I blew it up to the same size as this fractal size. And you can see the overlay is pretty much perfect. I mean, it just goes right over it. 3-hump consolidation. We broke out. We pulled back. And this is where we are today. And this is what it did last time. This big move here is that big move there. And it goes right up to the top of the channel, right at about $500, $600 a barrel out in late 2020s, early 2030s. That's exactly the bull market. Now, this bull market, if you look to see, these were the previous bull markets, this one here and where it peaked, and this one here and where it peaked. And then you can see where it ends up, the fractal ends up right in between these two bull markets that we had before. So the length of the bull market equals it. The fractal aligned perfectly with this big move, aligns perfect with a $600, $700 per barrel oil price out in the future. And how do we get there? The weakening of the dollar. So if the weakening of the dollar is going to push this up, we are starting to see the alignment of these ready to break to the upside too, where the dollar would weaken against these currencies. We just haven't broken out yet. We haven't broken out yet. Now, I don't know how Powell's going to stop this. I don't know if he can. I think it's in the bag, and it is. I wouldn't say it's a certainty, but I would say that all of the data suggests that this is occurring, and all of the people in the market that are trading currencies are suggesting that this is going to occur. So to take the opposite stance would be to disagree with all of the traders in the world, because the data that I'm grabbing and the charts that they are providing and the way that the herd is lining this all up around the entire world of all the traders combined are saying that we are going to get this big dollar weakness at some point. And that dollar weakness is going to manifest itself in oil. And in oil, we have a 3-hump consolidation, a breakout, a retest, and that retest suggests that we're on top of a new paradigm for oil moving higher. Just like we did in this one, and just like we did in the 60s, 70s bull market. So first bull market, second one here, and then we'll get a big third. And maybe there was one back here in the 1800s, but I don't think so. I think that's when oil was discovered. Coming down to platinum. Now, platinum, so oil is the most inflation-sensitive asset. It is one that it's the number one commodity. When money gets printed, it goes into oil because oil is the number one commodity. So it is the most sensitive to inflation because when credit comes into the system and it tries to buy anything, it has to flow through oil. And that's why it's the most inflation sensitive. It's the number one commodity. Platinum is the number one inflation sensitive metal when you go back to 1950 to today. So if you were to look, and I'll pull this up here real quick, guys, just so you guys can see the correlation between platinum and oil. So 1 second here as I go up. So oil. So here's oil, and then you could overlay platinum on top of it. Back out, and what we're seeing here, this is the fractal I grabbed. So this is oil and platinum. Oil is the big boy there. Platinum is that guy there. So, oops. So platinum overlaid on oil, you can see they move almost 100% together. And we're going sideways with both oil and platinum. So when we look at this, we have the same setup as last bull market that went up in 99, 2000, going on up for platinum and oil. Platinum, what I did is I took this fractal before, overlaid it. You can see it's the same rough fractal. It's almost identical. And we're right at the end of this fractal here. This one is pointed upward. You can see the lows are coming up into this resistance line. And we're about to break on platinum any second. What does that mean? It means that oil is going to break higher if platinum is going to break higher. If they're both inflation sensitive, that means that we can logically deduce that they are interconnected to some degree. So oil, and I know there's a lot of people worried about oil, breaking down in the short term. Longer term, I think we have to go up based off of the evidence that is around us. And then the currencies are also suggesting that. the way that this is going to break here. Now, again, I don't know if we go dip and then break or if we just break higher. That's what I don't know. I don't know the short term here. But these are all interconnected. They're all interconnected. So I'm going to go over some more stuff that people are talking about. It says marrying highly educated working women will be one of the worst decisions you will ever make in your life. A big red flag, son. So what's my opinion on that? Well, I dated some highly educated people, and I've dated ones that are not as educated. I think what matters is how well the person treats you. That's the first thing. The second thing is, if you have kids, if that is in your ballpark of having kids, who's going to watch them? What are you going to do with them? I wanted a stay-at-home mom where I would work and support for everyone, and I deem that my kids are the most important people in my life. It was my decision to bring them into this world, and I would not put them into daycare myself. So I wanted to ensure that my kids were well looked after, and your mom is going to do that the best of anyone else. So your mom looking after, the kids is something that I wanted. And if you have a very highly educated woman and you do not discuss these things beforehand, and maybe she has a career and you have a career, who stays at home and watches the kids? And that's where the big toss-up comes. Don't know. Who makes more money? Could you be a stay-at-home dad? Yes, you can do all that stuff, but there's a little bit more friction there. What if she's highly educated? She doesn't make a lot of money. Let's say she makes like 60 grand, but you make $200,000, and she doesn't want to stay home to watch the kids. What do you do in that situation? Even though she's highly educated, you should stay home because you want your kids to have the best care possible. And that making money is irrelevant at that point, in my opinion. And that's when the fighting begins, because you're going to disagree on who should stay home. And she's highly educated. Why did she go and get There's all these big things that could happen. If she's not educated and she still makes $60,000, she may or may not complain about staying home. So you got to find someone. I would say that's probably one of the largest discrepancies is, how are the kids going to be handled if you have kids? And a lot of people may not talk about that before marriage. And that's something that I talked about before marriage, but some people I don't think do that. And then one person's really pissed off because they have to stay at home and watch kids. And I don't understand it, but some people are like that. And then I've seen other people where they go to work, they have high-paying jobs, like a director or something, a female as a director, but yet they put their kids into daycare and their kids are all messed up. Not always, but sometimes they get messed up by daycare because of the need for a mom or a dad from year 0 to year 5, which is the most important years to be in the kid's life of any time of their life. It's year 0 to 5. And you can ask grandparents this, you could ask all sorts of things. It's when they develop and grow. And if you're not there for the big portion of their waking hours, they are being developed by someone else that you are paying a low wage to. Think about that for a moment. So from year 0 to 5, if you're throwing them in daycare, then those kids are developing some of their things that they learn about the world from a person that is probably not getting paid all that much if it's a big daycare thing. The wealth dad, it says, hopefully this mindset that dies with the boomers. It says kids don't need $1 million plus inheritance when they're 55 plus. Sure, it helps, but most of their life is passed by and done. People need money most around 30, starting families, needing bigger homes, cars, daycare, grandkids, 529s, etc. And then I guess what this is, I'll just sum it up. My wife and I spent almost 2 decades of leveling up in the jobs and careers and are now in their late 30s with 2 small children in a high cost of living state. We scraped and suffered to buy a small ranch house and 2 used larger cars for our family. Our credit suffered. they're personally in debt, etc., etc. They came across their parents' account, had more than $10 million. Later that week, I mentioned and saw it to my own dad. He said, well, he's doing just a bit better than me in terms of his mom. So his dad made 10 million plus, his mom, maybe he's at 5 million or 4 million, whatever. So he's like, what the heck? He says, I would give my last dollar to my son to make sure he was more comfortable, to make sure he didn't suffer debt or bad credit as long as he was working. Here are your own parents sitting on their piles of gold watching us navigate a new level of a jacked up economy and shopping for discounts and raising our children in subpar school districts. And for what? Question mark. Well, I'm going to say this, guys. My parents have a good chunk of money. My brother has a good chunk of money. I have a good chunk of money. I'm going to say this. Your life is the sole responsibility. Like, your responsibility is getting your SHIT together. You are responsible. Your parents brought you into this world. You were given a certain deck of cards. You know, your hand that you were dealt out of that deck of cards is something that you cannot control. But your parents gave you perhaps good genetics. Maybe they gave you whatever. Maybe it's crappy genetics. I don't believe that my parents owe me anything outside of giving me love when I was young, raising me correctly so I can have a world outlook on society and the world a certain way. They gave me, at least for me, I think they gave me pretty good genetics. I'm decently tall, decently strong, decently smart, and then I have to work with the cards that I've been dealt. To be this ungrateful and talking about their parents like this, I wouldn't give them any money either. Oh, well, it's your choice to live in a high cost of living state. It's your choice to have the job that you have and the money that you make. It's your choice to marry the person that you married, whether they're contributing positively or negatively. It was your choice to have kids. It was your choice, your choice, your choice. But you know what? My parents have a bunch of money, so they need to give it to me. Really? That's not how you become wealthy, guys. Do not have this mindset. Oh, I'm a victim. My parents are rich. Yes, am I going to help my kids when they grow up? I am. That's my choice. My kids do not have that choice. They're not going to tell me what I'm going to do. But I'm going to do what I want to do. And I'm going to help my kids, yes, but I'm not going to sit there, even if I've got, $100 million and just make them these trust fund baby, complete little ungrateful kids. Probably not what's going to happen, but I'll help them buy a house. Maybe I'll give them the house I live in today, and I'll go buy another one. Whatever it is. Oil price on this news, minus 5% now. So WTI falls 4% as it reported that Israel will target Iranian military, implying it will not attack Iranian oil production and export facilities. Then, Israel's PM office is not confirming this report from WAPO, but oil prices are still -5. So Israel's Prime Minister office, following the publication in the Washington Post, we listen to the opinions of the American administration, but we will make our final decisions based on Israel's national interests. And this is what's weird. In an election era, sometimes they hit the oil price down before something occurs ahead of it. So it's hit the price before some news comes out. So if the news comes out, we've got a cushion before it moves higher. I've talked about this on the website before. And it's just so weird that this came out. You can see the two big moves lower. We had false news there, and I think there was false news here, somewhere back here too. What's up with these false releases? What are they trying to do? I have also noticed that the 10-year yield and the 30-year yield are also down quite a bit. Same time that oil is falling. Almost like there's something to do with the credit markets. They needed oil to go down while they sold, well, this would be buying the 10-year and the 30-year. I think there's a bunch of interest rate manipulation going on perhaps too, because interest rates and oil are interconnected. I just find it highly weird. That's all. Here's uranium. So the uranium spot price is within a lovely 4-year parallel trend channel. And what he's talking about is this ping-ponging between the bottom and top. And we could potentially go to the upper trend line, which is $140+ per pound. So don't get too bearish on uranium here, guys. It's looking good. Warren Buffett says the most important quality for an investor is the temperamental quality. It's not an intellectual quality, the temperament of the person. Breaking in China, it says the Chinese economy has seen price contraction for 5 straight quarters, the longest such decline in 25 years. So I do think this is going to turn higher. When that turns higher, your oil price is going to turn higher too. Look at how this turned with oil price. Look at the move higher from 2000. So we had a big move up, down. Oil price followed this almost completely here. Outside of, all the way to 2008, and then we dipped, and then 2011. So the oil price was the China's economy going up and down like this. And then the consolidation lower. We had the nice big move up, and then we're probably going to see a bunch of stimulus, aka it's already happened. We'll probably see even more stimulus, and then we'll start to see this go back up again in the future. We'll probably also see India and some of these other ones come back. So that's what I think is one of a big driver here. So you can see the wave 1 to pullback, wave 3, pullback, wave 5. And isn't that weird how China's economy is doing the same waves? This was your consolidation. So lower high, and then we've consolidated 3-hump consolidation back. Your bottom was 2020. We created a new high here. And then I think we're going to move up into a wave 3 at some point. So we're in the range of 2000, 2002 here at some point. Coming down, just ordered 6 to 7 small modular reactors with no details yet on where they will be built. Goldman Sachs says 47 gigawatts of for U.S. data centers by 2030. Competition between states to fast-track a fleet of new nuclear reactors starts now. All right, so we were closing nuclear reactors. California's closing nuclear reactors. We're closing nuclear reactors all around the world, and all of a sudden, AI is like, we need electricity. And now all of a sudden, we are doing all these nuclear reactors. What happened to climate change? What happened to the Green New Deal? What happened to government saying that we're supposedly trying to get rid of nuclear? What happened here? Why the sudden change of sentiment against nuclear? I mean, I've always been positive nuclear. I want nuclear. Everyone else seems like they don't want it. But why the change? Just because Google and Amazon and these guys that want data centers, all of a sudden we're supposed to have a bunch of nuclear? Where's the consistency? Why are they flip-flopping like this? Is it because Google and Amazon and some of these Goldman Sachs and all these guys, are they interconnected with government and government does whatever they say? I don't know, maybe. Grady says silver versus platinum shows a large blue bull flag. Could mean silver is about to take the lead in the precious metals bull market over platinum. Also, this could also mean the market conditions that we're in. So maybe we get a slowdown before we get the big move lower. So maybe we pop up all the way up here, which would mean that we are at the end of the yield curve inverting. Then oil takes off, platinum takes off, and that's when the dollar will drop as this moves higher, and then we get the consolidation back into this pattern to the bottom end. That's my guess. Here's gold, and I just like this chart. He says, means the secular bull market resumed, plus the third and final bull phase started. The margin expansion among many miners will be astronomical. It's a lifetime opportunity and threat. Do get prepared. The red parabola line fits perfectly, and the time frame makes complete sense for a move like this. Boom, straight vertical. That would also mean, and also aligns with the oil call. Ridiculous. So it aligns with platinum breaking out here. It aligns with the currencies. It aligns with oil doing this. Because oil doing this would be the same as gold, because your ratio remain relatively stable. does this, it's going to bring the whole commodity complex with it. So you cannot have gold go up vertically and have everything else do nothing. All interconnected. And that's the ratios that we look at. And the ratio of gold to oil is at 35 or so. 35, 36, 37, whatever it is right now. We could take a look. Let's do it real quick. So gold to oil ratio, because we have a big down day and a big up day. So 38. We're at 38 right there. So this ratio, if I back out, to me, it kind of looks like a head and shoulders forming. And we could see this wick at the top there. We could see a wick that does something like that eventually. And then we end up going down, potentially. So I think that's what's in the store for us, and that's a shoulder, head, shoulder. It's inverted if you do crude oil to gold. And that's what I've got for today, guys. So give me a thumb up for the content, subscribe to the channel, subscribe to the website. Mayday coupon's still active. And that's all I've got for today. So we'll catch you next time. This is Finding Value.